Today we're going to get into the bigger time frames, but I want you to know some things or else you can really suffer when this actually does turn down and turn into some kind of bear market. So today, at the beginning of this video, before we get into those bigger time frames, I am actually going to go through something like Nvidia and show you opportunities recently that have behaved a lot like bear market behavior and that we have really benefited from. So let's go over to Nvidia just to show you guys that, because this is everything we do in the course. So everything you're about to hear is what we teach in the course. And as we go into a 30-minute, we can see that Nvidia is heading up to a higher level, right? We got a breakout and we do have some sort of reversal signal. These are some of the things you will learn in that course down in the description, now 90% off. You can see that downward push. We can see this downward trajectory, right, of the MACD and RSI. That is divergence because the price action is heading higher. Now, another thing that we give out on Patreon are monthly expected moves, and we talk about how important they are. And when I show you the past times that we have used those monthly expected moves tied together with everything we've learned in the course, they have been very, very good setups. And where is the monthly expected move for Nvidia? Well, you are almost at it, okay? You are pretty much almost to the top side, and you still have a long time left for October close, right? The last day of October is what that'll price in. So if we do get excited, we got to watch out because that's a great signal. Let me show you a couple times that we've used this signal over the past couple of months. If you've been a part of this channel and you've taken the course, you're going to understand this very, very well. You're going to understand that down in this area, excuse me, down in this area, we had some crazy downside and a lot of people saying, oh, there's going to be some kind of crash, right? Nvidia is going to crash down. This is really bad. This is really bad. But we just noticed that in the signals here, we do have a reversal. And what was happening this month for Nvidia was that monthly expected move was here. That has recently changed, but I want you to notice that downside monthly expected move was here. So when we broke down, we came down to that level. We saw support. And we broke down, crossing on our MACD. So what did we need to look for here? Well, we're outside of a monthly move. So this is when me as a trader, I see the loopiness of this MACD. I see it curl down and I go, hey, if that does keep curling down, that can be bad. And maybe these guys are right. And this is going to be awful and everything's going to crash. But if we just make a move like this and get back in this expected move, well, we have a 68% chance to get here. So I better be aware of any reversal signals. And we notice that Nvidia did give a 30-minute reversal signal right here saying, hey, I have a good probability to go into a positive trend from here on the 30-minute and curl up a 2-hour. That is what these signals mean. You have downward price action. You have the MACD diverging from that price action, pointing in a different direction, telling you the momentum is weakening here. And then if we zoom out on the RSI, you're going to see a significant divergence here on the RSI. Now, it's not drawn out the best, so let's just blow it up for you. You see how significant this really is, and that's when we pay attention, especially outside of a monthly expected move, and volatility was higher at this point. You had everything in the course was right here in front of you, and I want you to see what happened next, because if we just say, hey, this is going to reverse the trend around right here, and this is where we take plays, because this is where you have that good opportunity to go back in your 68% zone with a reversal signal, well, we can see that 2-hour turn up. And this is what we really understand in the course is these type of moves do like to curl up 2-hour charts. And so we want to pay attention to times that we can find those type of setups. So sorry, we had to pull it back over to get to it. I was like, that's not it. But we noticed that shortly after that, the 2-hour was able to curl up. Now this is relatively negative. So we have to be aware of some kind of lower high. So we want to react when we do see resistances. We did come up and fill a gap. So taking profit and things like that at a weekly expected move most likely did take place here. But for the most part, we just want to say, look where that 2-hour curled up. It curled up on this bar here, but that 30-minute actually got you in a little bit earlier. This is what the course is good for in a bear market. This is bear market behavior. Volatility was higher there. You see a simple 30-minute divergence outside of your monthly expected move and boom to the upside. And from that, so from that actual buy, let's go into a 30-minute to see what that percentage gain was from this actual buy right here. So from the actual buy, we see that Nvidia crossed up right here we cross up right before the gap up we cross, and if you took it all the way up to the gap fill, 16% with an option in only 5 days. in only 5 days. So you see how beneficial that can be for an option that maybe was even, it's a 30-minute divergence. Maybe you only take it for 2 weeks. We talk about that in the course as well, what to take. 30 minutes. Sometimes we're only taking 2-week out expirations to give us a little bit of time, right? We're not trying to get rich quick. We're trying to take smart, highly educated, highly probable trades. And this was a highly probable trade. It paid out and it was very, very good to us. But this happened again. This happened again in the past. We've seen this happen again and again over the past couple of months. And this month over here was August, right? This over here was September. Look at the beginning of August. This is when we saw some stuff for NVIDIA here. And you're going to notice that we get this big wick down. Well, when you're measuring divergence, it takes the close of the bar in these MACDs. So what do we notice at these lows when we spread out this MACD? Well, we notice that we came down and took a double dip, which is fantastic for a trader because this monthly expected move was sitting right here. We see the flatness. And guess what? That's a double bottom because this thing was able to reverse back around. It means a highly probable trend change here. And that's exactly what took place with this double bottom. So we notice that that curled up with divergence right there. If we look at the RSI, it's not as significant this time, right? It's not as significant, but it's still there. You see that little bit of significance there. So it is still there. And if you just see the actual market around this area, we're going to notice there's divergence as well. But this right here was able to turn up. Maybe you're looking for some kind of playing out of the entire move here. You would say kind of like a double bottom. We put that at the top here. We'd say, okay, we're going to reach towards this zone, and that's where we could consolidate. So let's pull up a 2-hour. Actually, let's just look at the measured move from there and just see how much that actually would have produced. Well, let's just take it to our zone, 13.36%. And again, 5 days. So you notice 2 weeks is plenty of time to actually see this play out. And this is all the stuff that we go through. And I want people to be able to start benefiting greatly from this information. You'll notice this is that move right here. You'll notice what is different here than here over on this side. Well, on this side, you actually had a 2-hour divergence at the same time. And that's what we talk about in the course too, just talking about these things at the same time and how they can lead to bigger moves. So what is this? It's a bigger move. Why? Because a 2-hour divergence can turn up a daily chart. So if you're someone who is playing this on the 2-hour signal, hey, you might have held this the entire time and said, okay, this thing is great. And you could have at the very peak, right? We don't try to sell at exact tops, but we try to take profit on the way. But if I took a month out option because I'm taking a 2-hour, well, then we're going to see that go up for 11 days for 24%. And that option will be very, very good to you. So these are the type of moves that I look for. These are what we look for. And you'll notice they pop up every once in a while, right? They pop up, maybe it's only once a month, but they will be such good trades that you're going to just say, hey, that was the best trade of my month, go into the next one, make another one, and it's going to be fantastic. So around this same area as well, this is how we were able to call the bottom for something like the SPY and the Qs, because you'll notice a lot of these moves didn't look perfect for the SPY, right? We don't have those same divergences, but we used NVIDIA to head higher, right? So that's what we want to do. We want to use those bigger stocks sometimes to figure out what's going to happen. Now, this did end up working out very, very well for the next one though, right? The next one actually did make a divergence. What did the SPY do at this point? It came outside of a monthly expected move, made the double bottom, really close to the center line, and curled up into positive territory. So if you're interested in learning this style where you can see massive moves after seeing a move outside of the monthly and volatility is higher, if you really want to learn this stuff, look down in the description because you can get both the swing trading course and the technical analysis course where you'll learn how to do this is in the technical analysis course, and that will really help you out in your trading going forward, and you can learn how to practice some patience. Okay, so let's get into those bigger time frames. I just wanted that to be a good thing. I know people wanted examples today, but I don't have time to do a live video today, so we're going to do a live video in the future where we really discuss these bear market behavior. We're actually going to go back to the bear market back in the day a few years ago and talk about some moves that we could catch so you know even more how to find them. In order to see that video, you're going to have to be a part of Patreon or take that course down in the description. We're going to add that to there because I think more examples just means more good things. So one thing we need to figure out here is, are these reversal signals going to turn down? Are these going to complete? Because we see the weekly divergence. We see the weekly divergence getting more and more significant, but hasn't turned down yet. So if this does cross, that's going to be a bad thing. Why would that be a bad thing? Well, it's because you have a monthly divergence still. It is flat on the MACD, but it is there on the RSI, and it goes all the way back to December of 2017. We see, ooh, big divergence all the way across this bad boy. So how would we go higher? And that's where I really think we need to actually talk about the Qs, which have a similar signal, but even down a little bit, right? Down a little bit. And look how significant that is right now. You have that dating back to 2018. So for the time being, we need to say, if we go through some monthly weakness, we can head a lot lower. How that would break down is mainly going to this area, getting some kind of bounce, and then turning down. That would give you the nice structure for some kind of ABC big monthly move to the downside. But I'm still leaning towards this being some kind of bear market. How do we know if we're actually going to go into this? Well, a lot of it's going to depend on the daily. A lot of it's going to depend on the daily, and a lot of it's going to depend on next week, because next week we have to get rid of something in the near price action, which is this right here. We have to get rid of that. We have to see the Qs not cross this MACD. They can continue to consolidate, but not cross and then turn up into positive territory and beat this high. This is how we end up going higher into 2025, is we see this able to project higher, get above this high, maybe make a sporadic move, but then see some kind of bigger pull down. That bigger pull down could be very beneficial, because that will most likely be the corrective move that ends up turning you up a little bit higher. So that's why I want to pay attention to it. But if we turn down now, you can see how that weakness can easily turn into a downward trend. And that's what we don't really want to mess with, especially when we know we could curl down weeklies, we could curl down monthlies, and monthly momentum is not something you want to mess with. Okay, we teach how to look at monthly charts in order to invest, right, in those courses. And it's pretty much the opposite of this, right? So this would be the time where if a monthly crosses over, you'd say, okay, I do not want to have anything in stocks, right? That's what that would say if that monthly rolls over. So something we need to do early on next week is curl up into positive territory again, right? Do remain curled up, do not cross down, beat that high, and then we can continue this into 2025. Now, that would be a correction. The overall crash is what we have to be aware of. If we drop next week, which is something I'm kind of leaning towards with the current price action that we're seeing in the shorter time frames, make sure you're subscribed and like this video so that you can see the video on Sunday where we're going to give the new weekly expected moves, and we'll show you that 30-minute signal that is there. It is there at the end of the week for the Qs, for the SPY, and for NVIDIA. So it's all at the same time, and it's even on volatility. Now, the key thing with volatility is that is still turned up with a crash signal. So we're just going over this stuff in case some new people come in, but this is a crash signal when the 50 crosses the 200 and remains above the 200. So the fact that this is not breaking down below the 200 means we need to be worried about something bad happening, and maybe this is some kind of cup and handle for volatility to come back in. We're going to go over the shorter time frames for volatility, but the main thing we need to pay attention to if we're going to see some kind of crazy upward run is anytime this daily MACD does curl down. That's going to be a big deal. But as we look at the bigger time frames, the weekly is still positive, in positive territory. We see that the monthly over here is going up, right? And it's about to reach that positive territory, which means we might, even if we buy ourselves some time for a few months, well, if this thing remains going in the upward direction in any way, if we hold up better with volatility, well, that means volatility can come back in on the monthly scale, and that is not something you want to mess with, all right? That's why we're talking about bear market. That's why we discuss some things that we teach in the course early on in this video, because that's the style that you're going to have to learn in order to be good in these markets. Bear markets are known to take as much money as possible away from everyone, not just retail, but everyone. It really is meant to do that. And so what we need to do is learn how to trade around it. And that's what we did. We learned how to trade around it, and using our strategies, they can just be bigger swings. So what do we want to pay attention to? Why do we think selling can come in? Well, because it's already come in, right? We've already noticed that people have been flying to cash. So we need to understand that people are doing that, and why are they doing that? And why is the weekly about to turn up here off of that 200-week moving average in our little zone? with those reversal signals on the 2-hour and 4-hour we found down here, we said the dollar was going to rocket up. And now we have a moment where the dollar is going up while the market is reaching all-time highs. And that could be a massive trap according to the dollar, according to people flying into cash. So if this weekly does turn up, we can see cash explode, right? This isn't even the explosive move yet, in my opinion. I think the dollar might explode here, meaning people fly to cash, which cash, if you didn't know, is the safest thing that people get into, right? They say it's the safest thing they get into. You trade everything for cash, right? You trade food for cash. You trade stocks for cash. You do everything with cash. So if people are flying into cash, that's when you really have to pay attention. Look at that weekly just about to turn up. On the daily, we do have the opportunity for some kind of pulling back. Okay, some kind of pulling back. So if we do see the market dropping and the dollar dropping at the same time, a lot of the time that means some insiders are buying. We just need to see if we're getting reversal signals with that, because a lot of crash scenarios, the dollar can drop for a bit of time. People try to catch that bottom and then people realize, oh, this is a crash. And then you see that thing take off. That's going to be something key to understand. But right now, the daily MACD is positive in positive territory. So watch out there. That's what this says. It says it's a time to be cautious, a time to be patient with your plays. But you notice we can find those great plays by using everything we've learned in those courses down in the description. So I guess the main takeaway and the main point for this video was to show you some times where this market has even acted like a bear market behavior, setting up those divergences outside of a weekly, outside of a monthly expected move. And that's why we're really pushing like, hey, these things actually can help you. I know it's a course. I know it costs money. I know I make money off it. And yeah, I'm a scumbag, but I believe it is helpful, very, very helpful. And I believe that this can really help you going forward, especially if things start to turn down next week. You need to learn this type of behavior, dedicate yourself to some learning over the weekend, but always make sure to have fun. That's the main takeaway. Make sure to have a good weekend, but dedicate yourself to some learning, looking at some charts, right? So we will be going over the shorter time frames on Sunday. I really do appreciate you watching this video. I know it was a little different, but we will be setting up that live video where we'll go through more bear market behavior. And that's why it's good to take those courses, because you're going to understand more of what we're talking about. So thank you guys so much for joining me today. I hope you guys have a great rest of your weekend. And I just hope that you guys are safe out there, right? There's a lot going on in the world. And I mainly just hope you guys are safe. And hopefully we can keep some of your money in the stock market safe as well by teaching you some of these type of moves. Thank you guys for watching. Have a great day. I'll talk to you later. Peace.